Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 5th of February. The heavy rotation out of tech stocks continued. Certainly, if my social media feed on x.com, etc., or many of the news sites is anything to go by, the tech bears are certainly emerging at the moment. All of a sudden, everyone's finding issues with capex, and everyone's finding issues with everything. Companies can report well and get sold off. And it's very, very difficult to, for the market to gain positive momentum. All around this Anthropic and Claude agentic AI research paper and things that's come out in the last few days. They're heavily worried about the monetizers, which we've spotted on the market map on a number of occasions. Palantir had a pullback last night, but was doing very well. But the likes of CRM, the likes of ACN, etc., are all have all been heavily hit, and they're worried about these things replacing these agentic AI models, replacing many of the functions that they do. It seems like a bit of an overreaction to me at this point in time, but there's always been that underlying concern around monetization, particularly for the bigger guys, but also now we've seen on a couple of occasions in the last week or so with these mega cap stocks reporting earnings where Meta's capex numbers saw them drop 5% initially before they rallied 10%. Microsoft obviously was not a great report in terms of in the eyes of the market, but the capex was heavily criticised. Google, very much the same, was down about 7% at one stage when their capex numbers came out, which is the headline everyone wrote. It then went to being up 5% because their core business was doing well, and then it sort of settled probably down around about 1% odd, which in the scheme of things, with, as you can see, this heavy rotation. Apple's being rewarded for being basically the simple cousin of the AI trade, because they haven't committed to anything and no capex. They're actually benefiting from being the worst at AI, which just I think is more it would be more money flow than actually anyone seeing value. They are sitting on a pretty large pile of cash as well. That's obviously why the likes of Berkshire Hathaway is up as well, sitting on record amounts of cash. Eli Lilly did well because Novo did poorly. They're one of the drugs there not doing so well. Novo slipped, which obviously is positive for Eli Lilly. But all of these green areas has been a very similar pattern for 3 odd days now. And you can see a market where the Dow and the Russell have done relatively well overall, but you're seeing the tech heavy S&P and Nasdaq now down. The daily on the Nasdaq now on the technicals is strong sell for the first time I've seen in quite some time. That is pretty concerning overall. The S&P slipped into neutral territory. We've still got strong buys on the weeklies here, but they're very much, we're starting to get pretty close to, 100-day and 200-day moving averages, I would imagine, in a lot of these things. And, they're very key levels that the long-term investors are really looking at. So, you've got the likes of... the likes of the S&P is probably about 400 odd points away, which is quite a way. But the 100-day moving average is only really about 150 points away. The Nasdaq 100-day moving average, just bear with me, is, I would say, it's almost on it. Essentially, is only really about, say, 300 points away. And we're about 1,200 points away in the Nasdaq, which is only about 5%, and we haven't breached that since last April. And prior to that, we hadn't breached the 100 and 200-day moving average since 2023. So they are quite significant levels for indexes to go through, and a lot of funds do take notice of that. I might do a little bit of a technical summary overall with this, because it's a pretty important thing to be mindful of. Gold and silver ended up higher. Gold was much higher. It was at 5,100 last night at one stage. Silver was up about 7 to 8% at one stage. But still finished up a couple. Copper was down 3. Platinum was about flat. So not much going on. Coal keeps going higher because of Chinese demand, supposedly. That's anecdotal evidence, not necessarily in economic figures. But that's why we're sort of seeing the likes of BHP and Rio rally really hard, because if they're buying coal, they're buying it for one reason, is to make steel, and they're going to need iron ore. So I think it's a few too many steps for my likings and a few too many ifs to be buying at these levels in those big cap miners. But Rio's certainly around about 7.5% through the previous record highs, or $9 or something. BHP's a couple of dollars away from all-time highs as well. So we've had quarterlies from those guys. I don't expect too much out of earnings. But momentum's certainly tipping towards those two stocks at the moment. So we'll be interested to see how they go today. And uranium having a bit of a breather, and a bit of a breather across the week. Bitcoin as well, making some fresh lows, and there is a lot of Team Bitcoin and Team Crypto's a scam going on, and a lot of rumors and conspiracy theories, etc. But Bitcoin and crypto certainly having some very large questions thrown at it. There's a rumor floating around that MicroStrategy might be in trouble. I find that quite hard to believe. But in terms of it feels like the anti-Bitcoin is trying to whip up some some short interest and push the price down, to be honest. But I don't think anything's largely changed overall. But just a general feeling that at the moment that there's something going on behind the background. There's this demand for precious metals, this whipping around of commodity prices, the constant policy changes, the capex numbers going on with. And then all of a sudden, a complete narrative in AI being flipped, and the market darlings becoming just absolute, getting pumped for reporting roughly the same beats as they did last year, where they would have rallied 10%. Even that Anthropic thing, that story 12 months ago would have been received and triggered a 10% rally, because they would have said, something along the lines of, how well AI is progressing. So. I think it's very much a sentiment-driven thing, and you probably don't want to put too much, weight into a lot of the rumors floating around. The reality is probably somewhere in the middle, and I dare say a lot of these quality companies, similar to the ASX tech stocks at the moment. I think we will definitely look back in 2 years' time and realise that any further downside from here, or any sort of knee-jerk sell-off, will probably be one of the better buying opportunities, I would have thought. The bubble theories and the comparisons to '01 don't really fly. These companies are the richest companies in the world. There is massive demand, and look, how they monetize it, yes, is going to be an issue. But it's not like these things are at 1,000 PEs. A lot of these Mag 7 or these mega cap companies have great existing businesses and they're trading on reasonable PEs. I think the market's ability to throw the baby out with the bathwater at the moment and overstretch and just throw fundamentals out the window on a short-term basis is really becoming, not so much for those who are doing their homework and those who want to stick to their convictions and be measured about their entries and exits. This sort of volatility is actually a massive win. It's actually more an opportunity than it is anything else, truth be told, because there are a lot of good companies out there that once they've lost momentum have been sold off ridiculously, and the fundamentals, no matter what the algos do, they win in the end. So good companies end up on a 2 to 3 year basis minimum, winning out essentially. So it's very much a the tactic as an investor these days has got to be have a certain element of filtering out the white noise and the hype, which just gets thrown at you constantly because of the social media algorithms and Google algorithms and et cetera, et cetera. So yeah. So for example, someone wrote a comment in my Twitter last night about the AI bubble, and all of a sudden my feed was filled with AI bubble stories, and I hadn't seen one all day. So it's it really is one of those things where we sort of tend to, the momentum shifts way too far to each end of the move quite often, and if you measured in dollar cost average, you do quite well. So yeah, if you haven't already, go to mosaic.mpcmarkets.com.au. You get your first month free. It's only $149 a month. Less than a coffee a day, your daily coffee a day. If you live in Melbourne and Sydney, it's probably cheaper. So yeah, you get 4 stock recommendation services. All of them are a minimum 70% win rate in 2025 and into this year. You get all of our content, podcasts, investor education, and most importantly, news. So we do quite regularly have updates and strategies and risk management plans around how to handle things. And you get and it's very important to get timely recommendations and shifts in your portfolios these days, because the market is, as we saw with silver last week, as we're seeing with tech this week, there can be some quite savage moves, and if you sort of, if you're not onto it, sometimes it can slip away pretty quickly. And the benefit of having it in the palm of your hand and getting a push notification is, even if you're self-directed, you can go and log in and get what you need to know when you need to know it. So it's available desktop, App Store, Google Play. Go to that address or scan the QR code and sign up today. But that pretty much wraps it up for now. We will speak again tomorrow. Thank you. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.